Welcome to my daily review. Today is Wednesday, March 19th. What a difference a day makes. As Jerome Powell spoke this afternoon following the decision on interest rates, and they're going to pause and leave interest rates alone for now and probably for a while. He did talk about uncertainty, but it wasn't what he said this time, it's what they did, and they are reducing their quantitative tightening. Instead of 25 billion a month, I believe it was 5 billion. So that's like an all systems go for the stock market for growth. It was really cautious ahead, heading into that meeting today. You can see yesterday it was down quite a bit. The Nasdaq was down 304 points. Bounced a little today, 246 points or 1.4%. Still has a lot of work to do. You could see it's 3.7% below the 200. 7.2% just to get back to this downtrending 50. So the Nasdaq has a lot of work to do. There's been a lot of damage, and that's kind of to be expected after 2 years, in 2023 and 2024. You can see these, fantastic years here. There's a 23 and then it'll give back, and then 24. So we had two fantastic years, and we come into 25, and then boom, 15% correction from the top. So that's kind of to be expected after two 25% years. I know there's a lot of noise going on with tariffs and whatnot, but you got to expect, after 2 years of 25%, some profit taking. We're now almost 3 months into the new year, and it's probably time to start, after a 15% correction, I think it's time to start. Yeah, maybe all that selling is done there, that 15%, and we could start a new uptrend here. It certainly has a lot of work to do, and I'm not saying it's all systems go. I just think, you need to start being a little more aggressive here, as it appears we've kind of, made a low here. Today's volume, people are asking about a follow through day. No, I mean, it was up 1.4%, but the volume was lighter than yesterday. And usually on a follow through day, you'll get subsequent confirming days in the next couple of sessions. What's today? Wednesday? Yeah, by Friday, Thursday, Friday, maybe in the next week, you should start getting some subsequent confirmation days where the Nasdaq pulls a 1.5% day or more upcoming. So that's what I'm looking forward to. I'm going to be a little more aggressive in the market. I don't like it below the 200, but you just got to play the market that you're given. And right now, this is where we're at. So I don't want to just sit on the sidelines and do nothing. I do see some areas of strength, and those haven't changed. And then you might have to be open-minded about buying some stuff that are, undercut their 50 and rally back through. So anyway, that's the Nasdaq. Had that 15% correction after two 25% years. So here we are. And starting perhaps, higher lows. That's how we can start a new uptrend. I'm not saying that we're going to take off to the races or anything like that, but this is looking constructive. How about that? The S&P 500 index, uh, this today was up a little over 1%, 60 points, closed at 5,675. The volume was 4% below the average, but I believe it was above yesterday's volume, 46.6, 46.6. So no, it wasn't. So anyway, like I say, if you, we're going to have some more confirmation days going forward, and that's what I'm looking forward to. And with the S&P, it's got to rally, first of all, through its 200, 1.2% below this rising 200. So it needs to get through there. So, there's gonna be plenty of opportunities. If we have a, rally, a strong rally like, you see here, there's plenty of opportunities to, get in and make big money in those stretches where we step on the gas. And to me, I think this could just be starting. So there's no sense in jumping in with both feet, but we're going to ease in, get off the brakes and just kind of ease in here to this market. At least that's what I plan on doing. And the RSP, which is the equal weighted S&P 500, this is without the the Tesla, NVDA, Apple, Microsoft. This was down, excuse me, up 0.75%, but with the S&P up 1%, those stocks that were driving the S&P, stocks like Tesla was up nearly 5%. To me, this looks like nothing I want to buy though. I know a lot of people are just stuck on Tesla and NVDA, and these things look, I don't want to say dead money, because if you own them, that's fine. They're fine. It's just I want to own growth stocks that have potential to do two baggers, five baggers, 10 baggers, and this ain't it. So I'm not hunting. This is not my hunting ground. This is not my playground at all. So if you own these, fine. Apple, paying a dividend. They look kind of sick. Microsoft, they're just overowned, overloved. People ran on these things. They just sat on them for years and years and years. They're thinking they're going to do the same thing that they've been doing for years and years and years. And, at some point, they're going to slow down. Meta, I mean, you can see what the hell of a run this thing's had, and it's not going to continue forever. I mean, stocks just don't work that way. Google trying to buy some growth yesterday, bought Wiz. I applaud them for that, because at least they're acknowledging they need some growth, but it's not going to continue just ripping higher forever in a day. No way. Stocks don't work like that. It's going to slow down. They're going to pay a dividend. They'll become value plays. And I just got to, say Apple. I mean, this has been a monster for many, many, many years. I mean, when Steve Jobs came back to the company, they had the iPod. I mean, it ripped higher. Even during the downtrend, of 01, 02, Apple did well with the iPod. Then 07 hit, and they came out with the iPhone in 07. Yeah, they pulled back a little bit, but this thing's been a monster forever. And they're not going to keep growing like this. And so that's a rare, rare bird right there. That's a rare endangered species there, Apple. So like I said, for me, I mean, you just got to move on and find stuff. New players are going to be showing growth that, younger, hungrier, meaner, leaner stocks, and that's what I'm looking for. Nothing against these companies at all, man. I order Amazon. My wife orders Amazon. I think she knows the Amazon delivery guy better than she knows me. Um, this one, but this is not going to go up forever, and this is below the 200. Maybe it'll rally back up and make a new high, but to me, I just think you can do better elsewhere. All right, enough said. What's working? The same stuff is working. I think you got to stick with some of the leadership, the European stocks. Money is still flowing into this group where, Germany has pledged some stimulus, for their country and infrastructure and stuff. So, the European names they're intriguing to me. This is Barclays, still looks pretty decent to me. Ericsson, this is a telecom, kind of a nice little cup with handle pattern there. So European stocks are still fine, and same with the China names. I know that there's some I don't know, some analysts saying it's time for China to have a correction, a 15% correction. Maybe so. I don't know. That's TIGR, the JFIN. They've been doing pretty well. This one making new highs today, up 6%. I think we'll take that all day long. QFIN, um, you know, I'm just showing you strength there. I don't own these I don't own these China names at all, but LX looking pretty good, making a new high today. Futu is another one that, if you're going to own something, needs to get off the 10 though. It's just been kind of squatting here. So I'm looking for a little better performance from Futu. Anything else here in China? No, I know what I'm going to go to is the the chili. You got chili alcoholic beverages. Why not? And then BCH, Chile Bank, and then of course the ECH if you want to play the Chile ETF. So there's a lot of international exposure that we need to have here with Europe, China, South America, and of course I've got to go back to the gold stocks when I had on my ready list this week. This is AU Anglo Gold, Ashanti, South African gold company, and just broke out of this double bottom base this week, up 10.2% this week. Not bad, especially if you're playing options on that one. USUA, oh no, wait a minute. USA gold, yes. So if you're into jingoism or whatever, USA. I like this one 985 and it traded above that today up to 1030 up 4.67%, almost 5% day, but it's up 14.5% this week. So the gold plays are still going strong. It's kind of defensive. No, it's really defensive. And it used to be like a hedge against inflation. People just dive into gold for protection or a hedge. Wheaton, Canadian miners are very strong. You can see the mining group, top five group, and Wheaton's another strong one in this group. I got to branch out a little bit here. DRD is another mining play, gold and South African miner making a new high today. That one looks very good. And then the copper minings or silver, some of these are doing well also. This is Freeport McMoran, right up straight up off the bottom, rallied through the 50, up 4% this week. So I like that kind of action, and we're going to have to get used to buying stuff like this, because if the market is going to rally, and I believe it will, 40.94, just 41 there, 40.80, somewhere in there, if it could bust through there. Yeah, FCX rallying, undercut the 50, now rallying back above, and it wants to go back, through the 200. We'll let it, right? And then the SCCO, Southern Copper, this is a former leader. You can see the group is not real strong. This is obviously a copper play, but if it wants to rally, it rallied already and undercut the 50, rallied through the 50. Now looks like it wants to take out the 100 level and the 200 simple moving average and maybe get back above the old 107 area there. So, just give it some time. It looks pretty decent to me, as it, undercut and rallied through its moving averages. Just, trying to get away from the gold and thinking outside the gold miners. There's other miners doing well. All right. And also doing well is the oil stocks. Oil has been, kind of taking its lumps recently due to concerns of economic growth in the U.S., but we'll have to wait and see. This one undercut the 50 and rallied back through, so that one looks pretty good to me. EQT. I have this one written down in FG. I'm not familiar with that and don't know why I wrote it down. Oh, this is utility gas distribution. Okay. Yeah, that one made a new high, and I put this one on the ready list, OGS. It's in the same group. Yeah, the gas distribution, natural gas play. It's still sitting here in this cup with handle pattern, is trading tight. Bounced off the 10 slightly today, but I'm looking for a bigger bounce above that 76.48, which is the standard buy point there. So I know that's why I wrote that down. All right. Some other oil and gas names here that I like. LB. This is kind of a recent IPO, last summer IPO, setting up in a base here and kind of breaking out of this double bottom pattern. You can see the blue dot here up 11% today, so that one looks good as well. Let's take a look at this on the weekly. Yeah. So it just thing hit the ground running. It looked like when they priced their IPO, it was just too low. And it finally got up to like a, a normal, what considered to be a regular price for this or what it deserves, formed this little, cup-shaped pattern and then sold off into this double bottom base. So it's probably going through its due diligence phase right now, but definitely one to watch out for. That's Land Bridge. Of course, the A's have it, AM and AR. AM breaking out here. Don't believe I put this on the ready list. I like it above 17.19. And then AR, don't have much gas on there quite yet, but I would call this a double bottom. I know Pattern Rec's not picking it up, but it made a bottom here at 36, tried to rally back up, and then made another bottom here. Looks like around the 32 level, and now has rallied. I don't know how many days in a row that is, but pretty impressive rally back up to that 41.17 area. So that would be an area of interest for Antero Resources. And I'm going to get off this kick and go to another energy group that's been beaten down. The nuclear stocks went nuclear. This is OKLO, got ahead of itself. Now it's pulled back and looks like it's trying to do that bottoming thing. So look for this one to rally back through its 50. The nuclear names, yeah, just got nuked. Same kind of profile here. This is nano nuclear energy and trying to rally back through its 50. And then SMR. There's another power company traded down to its 200, trying to rally back through. So it needs a little bit of work. But I had to point it out because it's up 11% today. All right, going back to the old standbys, what's been working? Insurance, unfortunately. This is Brown and Brown, still setting up in a base, trading tight here along its 10. I could see this one breaking out pretty soon, hopefully. I want it to break out pretty soon, but it's going to do what it wants to do. This is Aflac trading tight within a base near its moving averages, so I like that type of action as well. HIG, this is Hartford, cup with handle pattern. This one looks fantastic. HG, just take out the I. This is Hamilton Insurance. This one's trading nice right there along that 2071 buy area. It pulled back, had some sellers in here, some weak hands as it pulled back to the 21, and now moving higher. So I like that one as well, above the 2075 level. And then Ever Quote. And this one broke out of this cup with handle. I got to take a look at the weekly chart here. Yeah, this is nice here. Nice little cup. Probably rallied this week on earnings, but you could see the blue dot heading north. And the hammer candle here on the close today, that looks really good that should bode well for the rest of this week. We'll have to wait and see on Ever. So that looks good. Okay, that's enough insurance, don't you think? I've got to go to the trash. The pollution control stocks, GFL. Let me see. I look on the weekly here. This is double bottom. This is Ontario, I believe. Another Canadian stock. Double bottom base had the 3 weeks tight. Had a little some sellers in here, some pullback, some weaker hands, and now this week up nearly 4%. So we'll take that. Especially in this tough tape here. This is kind of a more defensive type area. This is ARIS Water Solutions. Another pollution control stock up, 8% today. That one's looking good. And then MWA, Mueller Water. I got hooked up with this thing a while back because of wasn't the dividend yield, was it? I don't know what attracted me to it. Could have been cash flow, return on equity, the balance sheet. But you can see this thing's just been climbing base after base after base. And now it's forming another base here, up nearly 4% this week. You can see this consolidation, this flat base area. Look to see this one trade above the 28.25 level. That one could appear on a ready list near you pretty darn soon. Anyway, I mentioned that I'm looking for growth, and to me, growth is where it's at. I know people poo-poo, earnings and everything. I'm still an earnings guy. People say, well, you need Powell, which is true. Powell's the most powerful man on the planet when it comes to stocks. And we saw that today, but you still need some growth. And I just go back to the growth in names like TGTX, triple digit sales and earnings growth. These guys are going to deliver the goods for quarter after quarter. I made a video this year of 10 stocks I thought would deliver 4 quarters of solid growth. TGTX was certainly one of them. And it's been, doing well. I don't know what it is. It's up in the last year. It's up 177%. And if we just go to 2025, it's up 41% this year. While the Nasdaq, I just showed you the Nasdaq, it's down, a lot, like 10% this year. So God, park some money in this baby. This one looks damn good. And Bros is another one. Now this one sold off and made a high of 86.88, pulled back to the 50. To me, the story didn't change. In fact, Dutch Bros is taking market share. They're opening new stores. Their story's getting better and the stock's getting cheaper. So to me, that's kind of appealing. People were saying, oh, it's going to close the gap here at 36. And I kind of doubt it. This is a growth machine. You can see here the big blue numbers down here. And like I said, they're just growing their stores. They're going to open 160 stores this year. They're only in 18 states. Now, I know, coffee's gotten a little more expensive, but they're not going to have any labor problems. They pay their people really well. So you're not going to have a strike or a union like some of these other houses. Yeah, coffee has come up a little bit recently and is a little more expensive. So there is some headwinds here, but I kind of like Dutch Bros on this pullback. If it can rally through that 50, I think, to me, that's a buy area. What is that? 67.78. Yeah, rally back through there. Um, we'll have to wait and see. But to me, taking a swing at bros here on this pullback is kind of a no-brainer if you're a longer term holder. I mean, there's going to be some, as Jay Powell says, some uncertainty. I don't know how many times he said uncertainty. There's uncertainty. Of course, there's uncertainty, but longer term, I mean, they're going to take market share. And if you just drive by a Dutch Bros, I've been all over Arizona, California recently. Dutch Bros signs, they're killing it. In this area. All right, they got to grow on the South and the East Coast, but they're doing that. And Robinhood, same thing. You know, if you're going to own a crypto, I'd like to own the platform and not something like MicroStrategy. I think their CEO is getting a little bit off the deep end. He's using the, borrowing money to buy Bitcoin and talking about selling a kidney to buy Bitcoin. I just, it's up 6%. Wait a minute, not up 6% after hours. It's up a little bit after hours. What is it? 304, now it's 305. I don't know. Market surge kind of wonky these days. They're working on it. But I prefer of these crypto names, I prefer to have the platform. Robinhood, I know they're going to 24-hour trading, which I don't like, but what are you going to do? That's the way of the world, right? People like to gamble. And if you have a phone and an app, you can gamble with Robinhood. I like to see this one trade back through its 50, though. You know, it's sold off. Like I said, 66 following earnings, and it traded down to what, 30, 35. My gosh. Now it's back above 40. Trading through these moving averages. Like to see it get back through that 50 there, which is 48 today. So. Anyway, yeah, just a lot of names out there that I like. Spotify. If you're gonna buy growth, growth is back in vogue, after Powell spoke today. Spotify undercut its 50 and has rallied back through. I think this one is kind of like Netflix, where people aren't going to, discontinue just because of, some hardships in their life. I think these will be the last ones that they discontinue. Netflix and Spotify. You can see Netflix is trying to rally back through that 50. I like that as well. Spotify is already back through the 50 and using that as support now as it rallied through, pulled back, and now bounced nearly 3% today. Just a lot of names that I like. I like Okta. I mentioned that Google bought Wiz. I thought this would get some more pen action. It didn't, but cybersecurity is an essential. You could see it's a top 20 group. Okta, I'm waiting for this one to break out here, and it's just marking time, allowing the moving averages to catch up. And another one that, for endpoint solution is CrowdStrike is king. 455 sold off following its earnings report down to what, 303, and now rallied back through its 200, trying to rally back through the 50. So to me, if it gets back above that 50 there at what, 385, I mean, it's go time. I don't see why the old buy point at 389 is, to me, that's still valid. Despite the ups and the downs and the ups, that's still a valid buy point at 389. All right. Um, DoorDash. This is a business model that I love. I know people like DoorDash, and I don't call people lazy because they order DoorDash, just convenience, and some elderly people, they don't want to, go through the hassle of going to the store. They have stuff delivered, they don't have to cook or anything. It's just brought to them. So I think this is a good business model. It's got, I don't know, what do you look at here? 12 billion in sales already, increasing sales, 80 billion market cap. I think this, if you're looking at two baggers, I don't see why DoorDash can't be a two bagger in time. Give it some time. DOCS, Doximity, another one I think has the potential to be a big winner over time. You got to let it allow some time for it to grow. 61.75 certainly a valid buy point. It ran up following earnings and pulled back to its 50, hugging the 50 near the pivot point. I like that one a lot. Another one, Palantir. I know this one is very controversial, and some people call it overvalued. It's got what, less than 4 billion in sales and a 200 billion market cap. So yeah, it's over 50 times sales. I mean, if you give something like TGTX something like that, this thing would be I'm gonna go here. This I forgot to show you something. This was a what was a $5,000 stock. It was a different company back in the day. But to me here, I'm just going to go a little shorter term. Back in 2000, it was a $56 stock. Sorry for the digression. And it just formed this cup with handle pattern. And it's got sales now. It's got a drug on the market. It's got growth. It's got this little cup with handle. Now it's starting to really rally. For it to get back to that 56 here, I think it's a no-brainer in 2025, that old 56 level. And I expect once it gets to that level, it's going to have some resistance. Yeah, around 56, I would expect it, just even if it hit 56 this summer, I would expect it to do this for a while. And then, obviously a nice couple of earnings reports, and it'll be challenging that 100. That's my expectation for this stock. Wow, up 41% this month. Not bad. All right. I got to get off this because there's some other ones that I want to look at. RBRK. This is in with OKTA and CrowdStrike, so I'm going out of turn here. But the point is, it rallied, it went up to 80 following its earnings report, sold off, undercut the 50, and now it's rallied back through. And, after this big rally, it's kind of, marking time, going sideways, allowing the moving averages to catch up. But I think taking a swing at this thing around 70, once again, a lot of growth names. I have my homework to do now because I have to think a little differently here with the change. The Jerome Powell, the Fed chair, and their decision not to raise, and their decision to ease the quantitative tightening. This is why the market did this. This is the time. This is the day right here, December 18th. And since that hawkish cut, we've seen what did I say, a 15% correction. And now he says, it's still uncertain about tariffs, uncertain about the economy, uncertain about inflation, but we're going to, kill the quantitative tightening, pretty much, turn off the faucet there. And so that gives the green light for growth stocks. So now we got to think more in growth. So you got to switch your mind around a little bit here and not be so defensive, even though insurance, the European stocks, gold, oil, all that's working. Might have to branch out into some more growth stocks, and those are where you get the go-go names that run quickly in a short period of time. Stuff like Dutch Bros, that thing can get back up to 86 in a hurry, or Robinhood could get back to 66 in a hurry. So you just got to keep an open mind. And I have some work to do tonight. Anyway, that's it for me. Thank you for watching. Except at mcstockcharts.com, I have one more thing. I mentioned the insurance companies, and we had after hours today. This Pro Assurance was bought by, I forget the name of the company. I'll have it in the morning. I'll go through this, but it's up 51% after hours, so that's not going to hurt the insurance business when you get M&A activity like that. Couple of names reporting after the bell today. A biotech stock, Capricorn Therapeutics, up nearly 2% following their earnings reports. Five Below reported, saw a nice response there, yeah, up 10%. For that retail name, some stocks in the morning, PDD, China name reporting, and then same with Academy. I don't know if, Dick's did not do very well, so I don't know if Academy, how that's going to respond. JBL, Jabil Circuits, or just Jabil now, Jabil, whatever you want to pronounce it. They report in the morning, and okay, Accenture. This is a computer tech services name, undercut the 200, so maybe it'll rally tomorrow. And the last one is DR Horton. The restaurants have had a real struggle. There's only a few of them holding up. I did mention Dutch Bros. It looks pretty good. QSR doing okay. Brinker, which had such a great run, now is below its 50. And then Wingstop, of course, stuff like this have been just slaughtered, Sweet Green slaughtered. So yeah, not many of them doing well. Bros, and actually Starbucks, after the big run to 117 has undercut the 50, but maybe that one's ready to rally too. Anyway, that's it for me. Thank you for watching. Like I say, I have a lot of homework to do tonight at mcstockcharts.com. We never give up.